dispute is typically an IRS audit or a state of Michigan or another state auditing a particular taxpayer on their return to determine the accuracy of the return itself. It's typically done because of what they call a DIF score, a discriminant function score that the IRS has come up with. They determine that based on what they call taxpayer compliance programs, which they do a mandatory audit of a certain number of taxpayers to determine if people are within a certain range or scope of deductions and or income. So if they look at it and say your charitable deductions are typically 5% of income, but all of a sudden a tax return pops up showing 50% of income, that's going to be outside the DIF score, therefore they may audit that particular return. That's one area. The other area that they could do an audit of or because of is there could be a mandatory issue that they're looking at. For instance, a couple of years ago they looked at all the sub-S's that had no shareholder income but large distributions. So it was an area that they felt was being abused, therefore they did the audits on those returns as well. You get an audit letter at the beginning saying we're going to audit you, and then there's a process going through the audit in which the agent will give you, at least on the IRS side, what's called an IDR, information document request. You respond to those document requests, you reach sometimes agreements with the agent on what items they're going to adjust, and sometimes you don't reach an agreement. The agent feels it should be an adjustment. We as a professional feel it should not be an adjustment. At that point, there is an appeal right to another authority, which is the appeals division, which is the IRS themselves. So you go to the appeals and you have to write a protest letter, you go to appeals, they listen to it, they judge whether they have a case on behalf of the IRS or if they feel that the taxpayer has a case. Taxpayers should be aware of the entire audit process and what happens during the audit process and what the agents are requesting. Keeping in mind that an agent's only doing what they're hired to do. They're hired to audit the return and make sure that the line items and the positions on the return are accurate and not running afoul of the government rules, either the federal or the state. Sometimes taxpayers become very passionate about it and they need to take that emotion out of it. Sometimes they feel that the IRS or the agent's out to get them. Again, the agent's just doing their job. There is a lot of information that the agents will be requesting sometimes depending on the position. It can be a long, drawn-out process sometimes. They just need to be patient during this process in order to get through the process. Provide information to the agent, provide accurate information to the agent, provide honest information to the agent. That is what's required going through the audit. And if all that's done, then assuming that the return was prepared correctly in the beginning, it should end up fine at the end. We go through an example of an audit, a federal audit that would typically happen. The client will receive a letter from the IRS saying you're going to be audited. The phone call is a little bit unsettling. Taxpayers or clients are always very nervous of getting any correspondence from the IRS or from any taxing jurisdiction. So they receive the letter or the phone call saying you're going to be audited, we're going to be at your location on this particular date. They forward it over to us. We then prepare a power of attorney to represent the client, the taxpayer. We forward that over to the agent. We talk to the agent. At that point, the agent has to talk to us all the time, so they won't talk to the client again. They typically want an interview on the front side, so they want to tour the business, they want to talk to the client, they want to gain an understanding of what the client does and how they operate. They also give us a standard list of items that they're going to be requesting. Bank statements, general ledger, employee history, all just general items that they're going to request on the front side. Once they look through that information, that's when they start developing their audit plan, and then they get into giving us the information document requests or IDRs. Again, those IDRs are what they're going to drive on those particular audit plan points that they're looking at. So if they're looking at gross receipts on a particular client, they're going to be having an IDR asking for everything regarding those gross receipts. We get that, we talk to the client provides the information, we then give that to the agent, hopefully settle that issue, go on to the next IDR. We could have a number of IDRs outstanding at one time, but we try to wrap those up as quick as possible. Once we go through all those IDRs and all the positions are settled, we sit down with the agent. We try to reach agreement on what the outstanding issues are. Hopefully it's nothing and we get what's called a no change audit, and we get a letter from them saying we're not going to change your return. Or alternatively, they'll give us a listing of adjustments, and if we don't agree with them, we can sometimes then sit down with the agent and his or her manager to go through that and try to reach an agreement. Sometimes we can, sometimes we can't. If we don't reach an agreement on those items, then we take it to appeals and try to reach agreement at the appeals level. Hopefully the whole audit process goes smooth, and hopefully we can get everything resolved during that process. Taxing authorities are becoming more aggressive because of the need for money. If you think about the states especially, they're low on funds. They need to get more revenue in the door. Therefore, they're becoming more aggressive in their audits and the number of audits that they're doing. The taxing authorities have more resources now. They can look at more things in order to determine whether an audit should be done or should not be done. They've increased their staffing across the board, so therefore there's more audits occurring. Tips to speed up the process would be along the lines of when the IDRs come from the agent, there's generally time frame to respond to that IDR. Usually it's going to be a 2-week process. Always recommend to be on top of those, get the information back to the agent within that 2-week period. Don't let the process drag out. The longer that you take to respond to things, or the longer you hold on to things thinking that the agent will back off on it, the less likely they will be. At that point, they will go forward with it, they will do assessments, they will make life very difficult, and we don't want to do that. So really it's working with the agent themselves, working with them in order to ensure that they're getting the information that they need, understand the information that they're receiving. Once they have that, it should speed up the process tremendously. But that's not to say even going through that an audit cannot take 6 months, a year, year and a half, sometimes 2 years to go through.